Good evening traders, it's Simon at Kairos Capital Markets. Today's video is about EMAs, how I use them and how I use multiple time frame analysis and put a picture together and what I look for with EMAs. So to start with, I want to show you the two things I do. I use the 50 EMA, which is always a red line, and I also use the 200 EMA. Now, I don't use the 200 EMA on the monthly chart because there's absolutely no need to, but on the lower time frames I do after that, and I'll explain to you why in a minute. So at the moment, notice how this pattern's been formed and the 50 EMA on the monthly chart has held excellent value here. Okay, every time I've gone near, bounce, 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 no problem. Then it just collapsed down. So really, if, and only if, we got to pull back to 65, that would be a beautiful sell here, purely because we got a double top and the EMA is in the way, but that's a story for another day. But that is what I'll be looking for next. Now, the way you look at EMA is this. Why it was making this pattern over here on the monthly chart, it was trending. Now, what I'll show you here, the 200 EMA on the weekly chart. So we'll go back very quickly. The 200 EMA here was the 50 EMA there. Now, there's a very simple reason for that. How many weeks are there typically in a month? Normally 4 weeks and a little bit extra. What is 50 average here times 4? 200 average here. So you have a nice guideline roughly of what's happening here. Now, what I want to highlight here is this, is notice how this started to break down to the downside, and you've got a crossover here, happened here, around at this area here. And this crossover here represents for me where the weekly and the monthly EMAs have crossed over, and that really gives a nice bearish sentiment. So when you get this fall down and a pull back to this area here, it's a very nice area to say, hold a minute, I quite like this because the EMAs have crossed over and it's definitely looking bearish on the higher time frames now. So to pick longer term trades, you would like to take it short from there purely because of the EMAs that have crossed over there. Also at the same time, the same EMAs as well, 50 and 200 again, have crossed over here on the daily. Now notice how they crossed over and price just fell down. Quite literally, price fell down. So you could turn around and say here on the daily chart, I've got this triangle breaking down here, but already on the daily at this same point here, so look, point here and here, that we've actually got a breakdown already to the downside. So it had a clear break of the EMA, where before it was chopping around the EMA quite a lot, and there's your clear breakdown. And this EMA, it just collapsed, it did. So this is how I use the EMAs to predict where I think price may be heading next. Now, obviously, on a trending market, a nice clean trending market, the 50 EMA is always going to be a nice way to get in and out of trade. So, just an example, we traded to it, then you can sell off, come above, come down to it, you can just buy off it, come down, come up to it, sell off it again. You've got the same here, the same here. You also got the same here as well. You didn't get the same here, but it did make another sell pattern there. It came down, came back up, produced two candles here. Over 2 days, that would have been a high test over 2 days. So you probably find on the 4-hour chart, it just produced a double top, then fell back down again. That'd be a beautiful sell there. And you could even probably trail your stops at every pullback and keep it above the 50 EMA for a long time. And notice how it just collapsed down all the time. Now, obviously, then it tested it here. You could say it's a test there, not the best, but it tested it here, come back down again. It then broke to the upside, come back down, and started testing the EMA here. Again, it did. It done the same thing twice here as well. It then broke to the downside, double test, fell away. What I'm trying to get at you guys here is this, is the EMA is really, the 50 EMA is quite a key catalyst to most of my trades and most of my analysis as well. And even going down to the intraday of the 1-hour chart, the 50 EMA is key. But again, no, you've got the 50 EMA times it by 4 is the 200 EMA. This 200 EMA is actually almost the weekly 50 EMA. So I always know on my charts where they're going, where they're changing trends here. Now notice here now for recent data now, notice how the daily EMA, 50 EMA and the 200 EMA are getting close together here. Now I would hazard a guess that if we start collapsing down now, there will be a crossover here. this will be the first sign of a trend change happening on, say, the weekly chart here, where you could say, oh, I think it would be for a nice long sell. If it is, you go to 44, and if after 44 you're looking around about 40, and then looking at the bare bottoms, you are there, the total at the bottom. So that is how I kind of gauge the EMAs, how I use them. And for me, it's quite a key thing in my trading. So just use them as like a trampoline, a little bit of guideline there, and go on from there. But just notice how the price on the weekly crossover, we are still in a bear trend here. The price has not popped back up again to actually signal a bullish run at all yet. We may get a bullish run, but that doesn't mean the trend is bullish. It just means we have a bullish pullback in a bear market. That's all that means there. Okay guys, I hope you have a good day, and I'll speak to you soon.